Hi, I'm Paul Bechtold, RVP at Debt Elimination Platforms at Gord Marketing. And with me today, we have Steve Allison, our own in-house annuity specialist with Gord Marketing. And today, we want to talk to you about how you can add life insurance sales if you're an annuity producer. And we're going to do subsequent presentations on adding annuity sales if you're a life insurance producer. In 2026, we want to make it your best year ever. And so we want to share some ideas and concepts with you today. So, Steve,
Yep.
you and I have talked about this a lot.
Yep.
There's annuity producers out there that kind of step over life insurance opportunities, and consequently, especially in a lot of the debt cases I do, I see tons of annuity opportunities where we have dormant retirement accounts and so forth. So let's talk through some of those.
Yeah, because it's really important to be able to diversify your portfolio, making sure you're not missing out on opportunities with your clients to have another agent come in the home and make a sale that you could have made yourself. So I guess Paul, why don't you have a couple ideas of how an annuity producer can make sure they're not missing out on some life cases, or what would be some ideas you have in mind?
Absolutely. Well, in most cases that I see, Steve, first off, if somebody's serious enough to buy an annuity, maybe they got qualified money, they're moving or something like
Yep.
that, they probably still have a life insurance need. They have estate planning needs, they have support. So that's right off the bat an easy identifier, if you want, as far as an opportunity. But the second thing is adding flexibility into their financial plan, because would you agree, Steve, whether you have assets under management or you have an annuity, you're either in contribution phase or you're in distribution phase, right?
Yeah, and I think what you're probably about to head towards is when people are in the distribution phase, they have to also make sure that they're not taking money while also taking losses from markets. So the flexibility I'm guessing you're talking about is being able to pull money out of a life insurance policy.
Yes, correct. The
Okay.
first thing is exactly what you're saying. We don't want to do what we call catch a falling knife, okay? We don't want to take a distribution from an already decreasing account and compound the distribution of that account at an accelerated rate, right? We may want to let that account recover
Yeah.
and let it bounce back, and maybe take loans from the life insurance policy, which, by the way, Steve, would be in most cases a tax-free alternative.
Yep.
Okay, so we could affect the taxes as well. Okay, but the other thing is that I was getting at as well is once you turn distribution on, we can't recontribute later. Okay, we come into money. Let's just say we have a 65-year-old and their parents are still alive and they pass away and they get an inheritance. What do we do with that money? Okay, we got to start another account. We got to go another route with that. Versus if we had life insurance, we could put it back in the life insurance, right?
Yep. Good point.
Okay. The second thing is life insurance versus annuities. Life insurance automatically increases your estate size. Okay. That death benefit is much greater than the account value in most cases. Okay. Especially the younger that you are. Okay. So, if in terms of actually maximizing the estate side, we are better off with some life insurance in there versus all annuities. Would you agree?
Yeah, and it really then ends up helping out too when the owner passes away too. It helps out with taxes that the beneficiary then ends up having to deal with when they inherit that qualified money.
Okay. Now, you are obviously deal with RMDs every day, right?
Oh yeah.
Okay. So having different sources of money to satisfy RMDs, maybe you have somebody that's got money they have to take from a qualified account or an annuity distribution, and they really don't want the income, they don't need it, but wouldn't it make sense to go ahead and satisfy your RMD and park it back in the life insurance if you got an outstanding loan?
Oh yeah. I've certainly pitched that idea, and I've actually done it personally myself as an agent when I was an agent back in the day.
Okay. Now, the other thing is, outside of life insurance, all other forms of financial planning involve taxes in some kind of way. So the very idea that you could create a Roth type of situation where I'm using an after-tax dollar in the life insurance and it's growing tax deferred and coming out tax-free helps mitigate a lot of taxes. Last thing, especially for our agents out there that have senior clients, okay? Those long-term care and living benefits. Let's talk about that a little bit. So talk about maybe some of the stuff that you do with annuities as far as satisfying long-term care needs.
Yeah, it's definitely one of the biggest concerns for retirees, and that can really mess up a retirement plan if you don't have that in the back of your mind and have something in place. With annuities, a lot of there's a few annuity products out there. They require non-qualified funds. There's one product out there that we can use that's life insurance based, but it will take the qualified funds, and it's strictly for long-term care. It's being able to leverage your own dollars to get more for long-term care needs. But I mean, how can life insurance help out with that?
Well, before we go to the life insurance though, we also have annuities that have enhanced benefit riders, right? Where over a 5-year period of time or till the accumulation value runs dry, we can double the payment out,
Yeah,
right?
that's handy too. I mean, it's really just more access. It allows the annuity companies allowing you to access your own money more. But the other ones that are strictly for long-term care are great because you're leveraging your own dollars for more dollars of the insurance companies.
Right. But in regard to your question about the life insurance, though, the chronic illness rider triggered off a loss of 2 of 6 activities of daily living,
Yep.
getting breast, toileting, transferring, eating, bathing, those kinds of things, or cognitive impairment, allows us to accelerate the death benefit ahead during our own lifetime. But the best part, Steve, is there's no coordination of benefits if you have the hybrid long-term care or you have the annuity with the enhanced benefit rider, or maybe even traditional long-term care. You get the benefit of all those.
of it.
So it can help little by little increase the benefit base and help to take care of our clients in a better manner. And then the last thing, Steve, let's talk about, what's important to the agent.
Oh yeah, I mean, like commission, you can get commission off an annuity sale. You'll get another commission off a life insurance sale,
Exactly.
and you're helping the agent, I mean, helping the client out. It's something they need, so it's a great for both people.
Here's the best part for you as an agent. Reach out to us here at Gordon Marketing. We have teams, whether it's myself on the debt elimination side or Steve and Tim on the annuity side. They can do all the heavy lifting for you. All you have to do is have the client that has the need, bring it to us. We'll do all the heavy lifting. So on behalf of Steve Allison and Paul Bechtold at Gordon Marketing, we want to say happy selling.